What's going on, guys? Today we're going to talk about the pros and cons of residential real estate versus commercial triple net lease real estate so that you can decide what's going to be the best investment for you. So with all of that being said, let's jump into it. I want to start by saying for years I've been terrified of the idea of purchasing commercial real estate with triple net leases. I'm at a point where I own over 200 units of residential real estate. I've got hundreds of storage units. And now this last year, I purchased $6 million in two separate buildings of commercial triple net lease real estate. So in the past, I've talked trash on commercial real estate and triple net leases and talked about all of the benefits of residential, especially multifamily residential real estate. But in this video, I think I can finally give an honest opinion on the pros and cons of both and help you decide which one's going to be best for you. I'm going to start with the pros and cons of residential real estate because that's kind of my bread and butter and what I've been doing the last 10 plus years. My first and favorite pro is consistent cash flow. This is because if you buy a property that even has 2 units, if you have 1 vacancy, you still have 1 unit there that's paying you rent every month. As you build your portfolio like I have and you have hundreds of units, this means that even if you have multiple vacancies or issues or problems or whatever it may be, you still have lots of tenants that are consistently paying, and it's very quick when you lose a tenant to be able to find a new one and get them in there so you have consistent cash flow. The next pro is economies of scale. Once you have management and your team in place and you've acquired your first couple deals, it's very easy to keep acquiring deals and know exactly what your bottom line is going to look like, because it's just a plug and play system of finding the right deal and then putting it into your systems and letting management take over. Residential real estate also has the massive benefit of appreciation. And this is something that just happens naturally. It always has happened. It always will continue to happen, where once you've bought this asset, it's just going to be going up in value every year if you've bought it right. I also love that you have a ton of flexibility with your financing. There's so many different ways you can borrow money on residential real estate, whether that's with a bank, with seller financing, with DSCR loans, and the list goes on and on. One of my favorite parts is that you have a lot of value add opportunities. These are situations where if you buy the property that is under market value when it comes to its rents or certain things that need to be fixed, whether that's paint, carpet, flooring, whatever it is, you can add massive value with not a lot of expense so that you can force appreciation on these properties. The other benefit is you have demand stability, so that even if you lose tenants, it should be a very quick and easy process to get new tenants into these properties if you've bought them correctly in the right locations. These are extremely scalable. Once you figure out what you're looking for and what meets your criteria, and you have a management company and a team in place, it's so easy to keep acquiring deals and adding them into your portfolio, and it really is just a plug and play system. Also, I don't want to forget all of the tax benefits. There are so many different tax benefits, from depreciation to your interest to everything else, that if you take advantage of them, you can pay a lot less in taxes while making a great return. Now, you can tell I'm very bullish on all things residential real estate, and I love talking about the pros, but let's spend a second on the cons. Number 1 is active management is required. You have to have a management company that's willing to deal with complaints from tenants, repairs, issues, problems, the turnover on tenants, and everything else that comes with owning a property with tenants in it, where you're going to have issues, and it is a full-time job taking care of these. And so you got to make sure you've got some form of active management. Your operating costs, especially in comparison to a triple net lease, are very high with residential real estate. You're just going to have a substantial amount of expenses. You're also dealing with a lot more tenants, which means you have a lot more tenant risk. You're always in a place where something could go south in their life, or you don't vet them properly, or they lose their mind, and you go from having what you think is a good tenant to a horrible tenant. Now, I've got lots of horror stories, and I can tell you they do have an emotional and a financial impact if you put the wrong tenants into units, and that is a major con. Emotional, damn it! You also can run into regulatory challenges where the government or your local government changes things that make it more difficult to screen tenants, to find tenants, to keep tenants, to evict tenants, to do all of these things that can end up costing you time and money. Even though I believe there is a lot less risk in residential real estate for a lot of reasons, you still are subject to the market and things that can change that can cause issues, whether that's people not living in your area or not liking a certain location or different things that happen that make it hard to find tenants for where you've purchased your real estate. As you scale, management can get complicated and it's hard to keep track and make sure that the units are being run properly. And so with this kind of investment, even with a property management company that's really good, you're never going to have a truly passive investment. There's always going to need to be some form of follow-up and consistently checking KPIs and checking in when you have major issues to make decisions to deal with those major issues. I don't want to scare you away because I'm telling you the pros I've listed far outweigh the cons of residential real estate, but there are a lot of moving parts. And that's why I think when it comes to residential real estate, it is an incredible place to build wealth if you're willing to be more of an active investor and involved in finding opportunities to maximize your returns by being creative and being involved. Don't take that too far because you shouldn't be there managing your properties. You want to find a place where you can be involved just enough to capitalize on your situation and your market to get the best deals possible and maximize your returns. I have loved working in residential real estate, and I've been lucky enough to be able to find specific niches, especially in multifamily residential real estate in my location, where I can maximize my returns, I can find undervalued properties, I can do renovations, and I can do different things to add massive value, not only in appreciation, but in the cash flow side of things. And so I love all things residential real estate. And that's one of the reasons I've been very hesitant to ever look into triple net lease commercial real estate, because if it's not broken, why fix it?
What does that have to do with anything?
No. He's got a point.
However, over the last couple of years, my life has been crazy. I haven't been able to be as involved on the real estate side of things, and for large chunks, I haven't been able to be involved at all. This put me in a place where my residential deal flow wasn't what it always had been, and I really needed to place money for taxes and other reasons just because I wanted to have my money invested properly with a lot less work up front. I got lucky enough to be approached by a business that was wanting to grow. They already had a thriving business in an incredible building that had just been renovated, and they wanted to cash out the building so they could start multiple other locations. They came to me giving me an opportunity to purchase this building at an 8 cap with a 10-year lease that went up in value every single year with an escalation clause and with 5 personal guarantees from all of the owners, so that it felt like a no-brainer to jump into commercial triple net leases. This pushed me to dive into all things triple net lease, to figure out what needed to be in the lease, how I needed to protect myself, how the location needed to be, what the potential risks were if they couldn't continue to pay their bills, was their business in the place where they could always continue to pay their bills, and what happened if they didn't that protected me, what would I need to do to get new tenants into the locations I was looking at, were they good locations, and the list goes on and on. After doing all of my due diligence on these properties, reaching out to multiple mentors, and making the decision to move forward with the purchase, I feel like I am somewhat qualified to be able to tell you the obvious pros and cons between residential real estate and commercial triple net lease real estate. With that being said, I still feel like every time I say commercial triple net lease real estate, it helps you know what I'm talking about, but there's got to be a better name. I think people call it NNN, but that also seems weird.
What do you mean by that?
Now that I've somewhat killed my credibility, let's jump into the pros and cons of commercial triple net real estate. The first pro I will say, and I'm going to be honest with you, this pro far outweighs any other pro that I will list today, and that is that it is truly passive income. Once you have the lease in place, once you've purchased the property, every single month it really is mail-in money. Because with a triple net lease, they are covering all of the other expenses. I have no worries, I have no expenses, they pay on time every single month. And so all my management is opening up my bank account on the first day of the month, looking at the money that just hit the account, smiling, and that's all I've got to do until the next month comes around. And that's how it's gonna look for the next 10 years.
Yeah, boy.
That leads to the next big win or pro of triple net lease, and that is that the leases are extremely long. A lot of times as long as 20 years. The particular lease I have on these 2 gym buildings that I purchased are 10-year leases. And so with that, there's also an escalation clause so that the rent that they have to pay increases by 2% every single year. This ensures consistent, stable, and predictable income every single month that's going to go up year after year. I also feel like these leases are substantially lower risk than a normal tenant you would get on a 1 or 2 bedroom apartment, because these are successful businessmen where you get to dive into their books and make sure that if they're giving you personal guarantees, not only on their business, but personally, you know they're going to be able to pay rent every month. The next pro, which we've already talked about, is minimal management. And I'm putting this here just because it's on most lists when it comes to commercial real estate. But I'm telling you, I've had to do literally nothing. And it looks like that's how it's going to be for the inevitable future. Inevitable is a very difficult word. Having these increases really does give you some form of inflation protection because you're somewhat going to keep up with the market. If you buy these right, you can purchase a property with a business in it that is a very stable asset class where you know the business is going to be needed and not a lot of things are going to throw it off kilter where they're not going to be able to stay in business. These are attractive to institutional investors, and so as long as you've got a good tenant when you're ready to sell, usually they're not hard to offload either if you get to a point where you need to sell these properties, especially if you've bought them at a great cap rate so that you could potentially sell them for a lower cap rate at a profit for you. Now, there aren't as many creative ways to add value with these particular kind of investments. However, I have seen a lot of other people that really know a location would be a great fit for a certain kind of business. They go in, do renovations on these commercial buildings, and then they fill these buildings with a lease that drastically increases the value of the building because the value is completely determined by the lease. Now, I've mentioned this above a little bit, but I'm going to say it again. I got personal guarantees on the leases that I got, and this is a pretty regular thing when it comes to a triple net lease. And I was able to do due diligence, and there are multiple owners all willing to sign triple net leases, and all of them in a great financial place, so that even if the business struggles or goes under, I still can go and collect rent from them for the remainder of the lease. FBI, open up! Now let's talk about the cons, and a lot of these are the things that for years and years kept me from being comfortable enough to jump into a commercial triple net lease. And they are scary, they are intimidating, but if you do your due diligence properly, a lot of the scary things can really be avoided or at the very minimum mitigate your risk quite a bit by doing things properly. But let's jump into them. The first con is the majority of these buildings have a very large barrier to entry. It's rare that you find a triple net lease that isn't an expensive building, especially if you want one that has lower risk. You also do have limited appreciation potential because that's all determined in your lease. If you're in a 10, 15, 20-year lease and you make it so that your escalation clause is not large enough to keep up with where the market is, you could get 10, 15, 20 years down the road and be way underpaid on a rent side of things compared to what the building's actually worth. But the building isn't actually worth that because the building is determined by the lease. And so you can really shoot yourself in the foot long time if you don't negotiate those leases properly. Tenant dependence. This is the thing that really sketched me out about these kinds of buildings, because if you have the tenant leave and they're no longer paying the lease, their contract is up or their lease is up, and you don't have another tenant to fill it, you're now stuck with whatever mortgage or vacant building and everything that comes with the expenses and everything else, and you've got to front the bill for all of it. And that is extremely intimidating, very scary, and that's why it's so crucial that you do set aside money as you're cash flowing over this property during the time to make sure that you've got reserves that give you the time to fill the property if you ever run into that situation. And you want to make sure you buy in a location where you know you can find another good tenant to fill these spots. Another con is this is a long-term commitment. Once you have them sign the lease and you lock it in for that 10, 15, 20 years, the lease is what the lease is. There's not a whole lot you can do to tweak or change or add value or anything else because you're locked into a lease. Your only real option if you get bored with this investment or feel like it's the wrong place for your money is to sell the property and hope that you can win on that deal because, again, there's not a whole lot of other options. This makes it so that you have almost no control over the property value because it is determined on the lease that you signed, and that is true years and years down the road. The property isn't just going to go up in value for you to be able to sell it because if you sell it, you still have that lease in place, and that value will be determined by the lease. Finally, you've got the market and location risk, which we have touched on, but if you buy a crappy property in a crappy location just because of the current tenant that's in there and they leave, you might be in real trouble trying to get it filled, because if it's in the wrong spot and nobody wants their business there, you're just out of luck. Now that we've covered all of that, I know the big question is, what is the better investment? Residential real estate or a commercial triple net lease real estate? And it's a really tricky question to answer because it depends. It depends on your risk, on the amount of money that you have to invest, on the amount of time that you want to consistently put in, your involvement, how much management, all of these different factors. And this is what I've narrowed it down to if you're trying to decide which direction to go. I think that when it comes to multifamily residential real estate, you can find more opportunities to get a larger return. But it is going to require more work. It's going to come down to finding off-market deals, doing renovations, increasing rents, adding value to the property. There are all these different things that require your time, your effort, your energy, your money to be able to turn it into a larger investment. It's very much an active practice, and you can do it with a lot less cash because you can get creative with financing and borrowing and all of these other options. Now, if you're someone that's sitting on money, and you find an incredible business in an incredible space at a fantastic cap rate, and you just want to park money and know you're getting consistent cash flow every month with zero stress, zero worry, this is where I would say that commercial triple net leases are incredible. I also believe this is a great tool for when you already have residential real estate and you want to diversify your portfolio so that you're not completely dependent on residential real estate. You know you've got that mail-in money every single month from the commercial properties you've added to your portfolio. At the end of the day, if you do your research, whether you're going commercial triple net lease route or residential route, as long as you buy right and get the proper leases put in place and have the proper management, you're going to win big. Now, I'm going to do a full video with a tour of these properties in the next couple of weeks so that you can see inside these commercial gym buildings that I bought and we can really dive into the numbers more. And so if you've got questions, let me know in the comments. I'm going to go through them. I'm going to try and address them so that you can have any of those answered, and we'll look forward to seeing you in the future videos. Thanks so much, guys. Have a great day.